Good evening, friends. We start this evening with the roller coaster ride on Wall Street. It's been consecutive days of losses, but this Monday was the worst during the Trump administration and the worst in history. The market went from a correction to a potential crash, and the signal to investors is clearly uncertainty. The Dow was down as much as 1,500 points today, finally closing at 24,345, dropping 1,175 points. For more on this, we turn to Bart Chilton, host of Boom Bust here on RT. Great to have you with us, Bart. Define this. What's happening?
Well, it's huge. I mean, it's a crash. We've even talked on the program that there was going to be a correction. Markets were up 30% year over year, and people were just making a lot of money. And I've almost became embarrassed, Ed, because for months I've been saying there's got to be some correction. But we never anticipated, and no commentator anticipated, that we would have it so fast and so furiously. As you say, 1175 down today. That's 4.6%. And even NASDAQ, so it wasn't just the Dow. NASDAQ was down 273, which is 3.7%. So markets took a terrible tumble today.
So in 2 days of trading, it's just over 7%. 1,841 points off the Dow. Is this going to continue? That's what Americans want to know.
Two things. Put that in perspective, too. The two-day loss, which you're just speaking of, the last time we had that two-day loss was November of 2008. So recession-level drops in the markets. I think it probably is going to continue a little bit. I can't imagine that it will be this large. People talk about a 5 or 10% correction. This is somewhere in between, so that still may have a little bit further to go, but I sure hope it isn't that fast and that furious.
Is uncertainty the proper word?
It sure is. I mean, we don't know. I mean, all the experts that you listen to are saying that they're not sure what's going to happen. And that's not a good thing in markets at all, because people begin to bail and they get margin calls. That is, the down payments they have on stocks. When their broker calls and say, if you want to stay in this, you've got to pay more money, they get out. And there's sort of a reciprocal domino impact here, Ed, that I think is taking place.
Bart, what about the speed of this and how it happens? It's almost like lightning speed compared to drops we've seen in the past or corrections.
It is. Well, I've talked over the years, about the high-frequency traders. I call them cheetah traders, and because they're just moving in and out of markets so fast, they're really trying to scoop up microdollars in milliseconds. Now, there's nothing wrong with speed in markets, and they add a lot of liquidity because they're trading all the time, and that shouldn't bother somebody that's trading on E-Trade. But the bottom line is they are so fast that when markets take a tumble, they really fuel inject that and goes down faster. The good news is when markets go up, they also rise faster.